down. Let's talk about Anand Rathi Wealth, however. The street is cheering those numbers. The company has maintained its trend of delivering strong growth in the first quarter. They've also achieved 88% of its guided AUM for FY26. Feroze Azeez, who's the joint CEO of Anand Rathi, joins us now. Feroze, you want to revise your guidance? 88% you've achieved in the first quarter itself, with 3 quarters to go.
Good morning, Mangalam. No, ideally the AUM number has a lot of external variables, so we will not take chances and disappoint our shareholder at the end of the year. So we'll keep the 1 lakh crore AUM mark as the guidance. Out of the movement from the from 31st March numbers, we've seen about highest ever net mobilization, and market has also given us something. So I think to answer your pointed question, no change in the guidance. All 3 parameters, revenue, PAT, and AUM. But so, there seems to be a case of an AUM guidance revision, but we will hold our horses because we want to undercommit and over-deliver.
Can you split that? You know, how much of that was because of external factors? How much of that was because of internal control?
So we added the highest net mobilization, which is net mobilization, by which in Anand Rathi's nomenclature, net mobilization is very microscopically looked at. We don't count if there is somebody holding a tax-free bond. We don't count that. So that's about 3,800 crores of net mobilization in spite of the uncertainties which the markets had.
Got it. All right. Hi, Feroze. Good to see you in. Your cost to income has dipped by around 570 basis points on a quarter-quarter basis. Any one-off out there? What's the sustainable number you're looking at?
Yes, Nigel, of course, there is some degree of operational efficiency which has come in the first quarter. But I don't see any further cost to income ratio reductions because we like to reinvest in the business. As you would have heard me see in the last 14, 15 quarters, we've been doing the results. We've always been saying we're going to reinvest our monies and not look at operational efficiency at this stage of our business. We believe that we are not even the first stage of a company's evolution. So not too much should a shareholder expect in terms of operational efficiency, because if I reinvest is when I can consistently grow at about 10, 15 years. Nigel, I think I should definitely highlight to you in the NSE Small Cap 250s, whom we are a constituent of. In the last 3 years, we checked how many have given a PAT guidance and met it. We are the only company in NSE Small Cap 250 who has given a PAT guidance. Of course, not all of them give. So we want to make sure this statement I'm able to make when I'm 60. So that's why we will reinvest.
All right, you will reinvest. On the RM front, I have to ask you this, because the last couple of quarters that we've had these conversations, you've been aggressively adding RMs. This has been a case over the last 5 to 6 quarters, if I remember correctly. Now, the last quarter was just 2 additions that we've seen, from 380 to 382. That also has led to some improvement in operational efficiency. Do you think this is a number that you will maintain? And given the sort of rush that there is for relationship managers in the industry, you will hold your horses because you have enough?
Mangalam, like you rightly said, you very clearly, rightly noticed one of the lowest number of RM additions. We had let go of a couple of RMs as well. Because of some issues, but our attrition is near 0, 0.1. 0.2, we have, like you said, in the industry, there is so much demand for private bankers or relationship managers, whatever nomenclature we want to use. But we have believed that we have to internally build them. If I buy a relationship manager from somewhere, it is but obvious somebody else will pay him 30, 40, 50% and then take him away. So if you want near 0 attritions, you have to have at least 70, 80% of your RM fraternity internally trained. And that's what we've been doing from 2015-16, when we realized that this hypothesis that building a wealth management business by hiring RMs laterally is not a great hypothesis. So we started investing in this model in 2016, December 2015 to be precise. From there, today, 83-84% of my RMs are from internal trained. Some are from IIM, some are rank holder CAs, some are from modest colleges as well. But we internally train them and keep a cultural fabric intact, is why our attritions have been low in an industry where attritions are not being able to be curtailed.
All right, a pitch for the team as well there, Feroze. I've interacted with some of them and they're quite happy and quite upbeat on prospects going ahead as well. You keep them fully motivated and keep them on their toes. Good on them. But you're also looking at expanding operations abroad, Bahrain, UK. There's an opportunity you mentioned in the past. So say in the next 3 to 5 years, what to the contribution to the flows, financials from operations as well, Terma, because there is a big market out there.
Nigel, I personally believe, like you rightly pointed, there's a huge market out there. See, capital searches for growth. And I think global capital, NRI capital, will look for growth. And I think they will not be able to ignore India for far too long. We are very upbeat about our prospects, like Bahrain and UK. We have a Dubai office, which has done beautifully well so far. So I think I'm very, very positive, but I would not want to comment too much in terms of what business from an Anand Rathi standpoint. But I think I was in Paris for a conference where there were about 1,000 professionals from the globe, where I go every year. The kind of enthusiasm everybody has towards India has dramatically shot up over the last 4 or 5 years, especially post-COVID. So I think we want to be making sure that we lay our chips at the right place, build it. The AIF models or the Gift City models and the AIF freedom which Gift City provides and dollar investments with no problems of repatriation, the tax benefits for a corporate, the tax GST benefits. I think all of this put together creates a very strong case for a wealth management outfit to not look away and build the foundation for a robust international business.
You briefly alluded to Gift City. Have you made a decision there?
Mangalam, not as yet. Of course, one of our group entities has had some experience in terms of taking licenses, so that we are borrowing in terms of their understanding, but you will see some action very soon.
You also mentioned Paris. I wondered whether you were in Paris right now or not, because there's so much greenery around you. Where exactly are you joining us from, out of curiosity?
No, I'm joining in from a resort in Bangalore. One of my friends' birthday was but I
wonderful way to
Paris during the storm. So
okay,
hardly any greenery.
You don't want to disappoint shareholders by over-guiding and under-committing or over-committing and under-delivering and all of that and stuff. But you did give them a bonus last year. There was a buyback. This year, what's the plan? Is there another bonus in the offing? Is there another buyback or maybe some dividends coming in? You're enjoying the party in Bangalore. What about your shareholders?
Yes, Mangalam. See how we look at it. I'm telling you with no holds barred, as transparently as possible. When we discuss, we say after bonus, our dividend, we gave 14 rupees. Can we maintain that in spite of a bonus? That's the target which we have. So every time I give a bonus, I want to keep 14 rupees as a dividend on expanded number of shares. That's the aspiration. Point one. Buybacks, of course, we did buybacks that gives tax efficient payouts, that used to give tax efficient payouts to our shareholders. Bonuses, I think the frequency, as far as if I have to tell you as transparently as I could, good. Yet please don't hold me to it. Every couple of years, 2 to 3 years is what we internally discuss, but that's not a guidance. I'm just telling you exactly how we discuss amongst us as professionals.
All right, Feroze, SEBI has proposed relaxing Regulation 24B and may allow mutual funds to offer investment as well as advisory services to non-broad-based pool funds, which requires a separate PMS license now. What are the kind of implications on your business if this goes through?
Nigel, if you look at regulation is creating several very, very effective vehicles for a manager and a client to pick and choose from. So do I welcome this move? The answer is a big yes. See, now you have the special investment fund in the mutual fund category. You have the mutual fund, special investment fund, AIF, and the PMS with further expansions of the PMS gamut. So to answer your pointed question, does it impact business? Not from a revenue standpoint. Does it help everyone to understand what their capability is and what my client need is and be in the daira of regulation? The answer is yes. So I'm so happy with the canvas expanding and limiting factors are so low. Now, if you see AIF allows you 2 times leverage, allows you covered calls. If you look at SIF, allows you covered calls. Mutual funds have a limit on it. So anywhere you want to go, there is no bahana to do direct derivative or stock. For most investors, if they want risk-adjusted return, they have to come into this gamut. If they go mathematically, there will be no merit left to do direct equity together and derivatives separately, like most people are burning fingers. So I think I love the way regulation is shaping up, and the 1st July circular of derivative, where we move from notional to delta, is something which is path breaking for the derivative markets, which will show up in the next 3, 4, 5 months.
Let's see how that shows up for the industry, but more importantly for your numbers as well. For now, we'll let you go enjoy the party that you are having in Mangaluru. Your shareholders rejoicing with these numbers. Look forward to having you on some of the personal finance shows as well. Feroze, thank you as always for discussing the business.